2019 was not really kind to equity investors, especially portfolio managers, with the average return of the top 50 portfolio managers coming in lower than the benchmark indices. But like always, there were a handful who managed to actually beat peers, and we spoke to the top 4 portfolio managers of 2019. While the common theme remains that they bet on firms that are expanding their market share, each of the 4 have their own strategy on when and what to buy in 2020 and what could work. So I'll give you what we believe were the key excerpts of the conversation. So the number 1 ranked portfolio manager was Club Millionaire Financial Services. They have the assets in December 2018 were about 417. Those assets under management moved up to 1,052 crores because of new money and because of the gains. Look at those gains, 31% returns in 2019. What is it that they believe should be done? Well, they're saying repeat what works. They would wait for the right price to buy a stock. They're not scared of holding on to cash. This is Paresh Sangani, the founder and chairman. He believes that there's a focus on market share gainers, not necessarily the current market leader. In fact, Paresh mentioned that at times the number 2 player has a better chance of gaining market share and thereby giving returns, stock price returns, as compared to the market leader. So this is their strategy. They've done well in 2018 as well, by the way. In 2019, they are the table toppers. You got to heed to his advice. The number 2 portfolio manager was Marcellus Investment Managers, and we've seen Saurabh Mukherjee, Pramod Gubbi, Rakshit Ranjan come number of times on our platform. Pramod Gubbi represented them. Their assets in December 2018 were 10 crores. They have moved up to 865 crores. They have seen significant inflows and some gains, and with reason, right? Look at that. If you give 28% returns in a year like 2019, surely investors would flock to you. Their key advice, well, they believe that assess the company based on growth and not valuations, because growth will take care of higher valuations. They're also saying that they are betting on secular stocks and not cyclical stocks, because they might not be able to catch the bottom on top of the cycle, and therefore they believe that it's best not to tinker with the portfolio strategy because of market seasons. Markets will do what they do. Portfolio managers should do what they should do. The number 3rd ranked performer was Ambit Capital. Assets under management in December 2018, 220. Those assets moved up to about 296 crores. The CEO of the company had spoken to us, and he mentioned how they believed that, amongst other things, you look at how 2020 and 2021 are likely to be years of consolidation, and therefore not to get too worried if indeed portfolio gains don't come about. They could well come about at a later point of time, and portfolio management as well as investing should be looked at from a long-term perspective. The last one is Samiksha Capital. Again, a new entrant of sorts, Bhaven Shah's Samiksha Capital. Their assets under management have largely stayed the same, and while the returns in 2018 were a negative 10%, they have bounced back with about 20% returns in 2019. Bhaven mentioned that he's extremely conscious of the price that he pays for a stock, and they currently find value in the mid-cap and small-cap stocks and hold a very diversified portfolio. I think the number of stocks that they have under their list or coverage is about 22 stocks. So Bhaven was a bit of an outlier compared to the other 3 portfolio managers, but it takes all kinds. And his advice is to go out and buy into value and not necessarily only growth. They do not believe in paying a premium for growth.